Hey, VA borrowers, my name is Steve Doherty. I'm the Raleigh VA loan guy. Today I want to go into a little bit more depth in a common question I see from VA borrowers. Should I always use my VA entitlement? Should I always get a VA loan when I'm purchasing a primary residence? Well, there are a couple scenarios where it may, not definitely, but it may make more sense for you to get a conventional mortgage, Fannie Mae, Freddie Mac, as opposed to using your VA entitlement. Specifically, if you're putting 20% down on a home, or maybe even 15% down on a home, it may be more cost effective for you to get a conventional mortgage if you do not have a disability rating from the VA. A disability rating from the VA means you do not have to pay a funding fee on a VA loan. Funding fee is sort of a form of mortgage insurance. I know mortgage insurance is kind of a dirty word, and you've probably seen somewhere online that the VA loan does not have mortgage insurance. I don't really know if that's entirely true. Funding fee sort of looks like mortgage insurance to me. So if you're putting down 20% on a home, on a conventional mortgage, you will not have any form of mortgage insurance. Whereas on a VA loan, even if you're putting down 20%, you don't have a disability rating from the VA, you will have to pay that funding fee. It's either paid up front in cash or it can be added to the loan amount. Either way, in that scenario, the VA loan may not be as cost effective as the conventional mortgage. Now, depending on when you purchase a home, depending on what the markets are doing, maybe the VA loan has a 3/8 lower interest rate. Maybe that may be worth it to still go ahead and pay the funding fee. But that scenario I just laid out for you is one where it may make more sense to do a conventional mortgage. Another scenario is if you've just sold a home and you have significant proceeds from the sale of that home. Let's say you made $150,000, $250,000 on the sale of that home, and maybe for tax purposes you have to take those proceeds and put them back into a home. Now, what the threshold is for those proceeds and how much you can pocket, that's a totally different topic. But let's say you have to, or you want to put that back into your next home, into home number two. Maybe you just want to keep the loan amount low. Well, at some point, the VA doesn't really give you credit for a large down payment, or what we call in the mortgage industry a low loan to value, or LTV. On a conventional mortgage, if your LTV is 50%, meaning you're putting down 50%, you may get a better interest rate with a conventional mortgage. So in that scenario, even if you have a disability rating from the VA and you're not going to pay that funding fee, you may just end up getting a better interest rate in a conventional mortgage. It kind of depends on what markets are doing at the time you go to lock an interest rate, but it's just something to be aware of. Outside of those two scenarios, it's pretty hard to come up with a scenario in which you would not want to use your VA entitlement. It's the best mortgage out there, generally speaking. You should join the military just to get it if you haven't already served. But in general, it's pretty hard to beat a VA loan. Now, there's another topic which I'm going to cover next week, which is the VA loan competitive from a home buying perspective? Kind of a different topic, but we'll get into that next week. Thank you for watching. I know that was a little bit of a long one. I hope you enjoyed it. Keep tuning in. Thank you.